Ladies and gentlemen, we have some urgent news, an urgent warning that has just come out from Walmart's former CEO that says the consumer is starting to buckle for the first time in decades. We have seen the consumer, according to the mainstream media, be very resilient, have very strong balance sheets, but we all know that is not true. We all know the consumer is crippled by credit card debt. The cost of living is crippling the consumer. Everything is getting out of control, and the US consumer can't keep up anymore. All they're doing is just buying the basic essentials, but even the basic essentials, like having a roof over your head, having food on the table, having utilities, paying gas, paying petrol, is now becoming a luxury, everyone. So let's get into this report that the Walmart CEO is now finally admitting that things are getting very bad. So look at this, everyone. Consumers starting to buckle for the first time in a decade, former Walmart US CEO Bill Simon warns. So let's dive a bit deeper into this report to see exactly how are the US consumers buckling. And let me know down below if you're facing some of these same issues or if you're seeing this in your area. So listen to this. A dawn of bargains may be fading. So I'll go ahead and adjust this here so it's a bit easier for you guys to read and follow along. So, as a three of the nation's biggest retailer kick off key sales week, our former Walmart US CEO warns consumers are starting to buckle, like we said, for the first time in a decade. And this is a few of the things he's warning is the headwinds for the consumer. And let me know if you agree. So he's blaming a list of headwinds on consumers, including inflation. I think we can all agree that that's just making the cost of living unbearable. You know, I'm going to the grocery store now, and it seems like only if I buy a few items, it's still minimum $100. That's in Australia, in Australian dollars, okay? If I fill the trolley up, it's about $400. I have a big family, and our grocery bill is getting close to our mortgage. If you have a big family, especially a big family likes to eat, your grocery bills are getting out of control. Also, high interest rates. I think we can all agree. All these consumers that are putting their expenses on their credit cards, well, credit card interest rates are at all-time highs now. Also, people wanting to buy a home. Not only now do you have to pay near all-time high prices for homes. Not everywhere. There are some areas where house prices are down around 20%, but you're paying triple the amount of interest people were paying, or nearly triple the amount of interest people were paying just a couple of years ago. Also, federal budget wrangling. So a lot of assistance from the federal government all around the world, not just the US, Australia, Europe as well. They're cutting a lot of federal spending, a lot of federal support that people had during COVID. Also, polarized politics. Okay, we all know polarized politics is getting worse and worse in the US. Leading up to the conflict in Israel, there was a huge polarization in Israel as well between the left and the right. So that may have a bit to play here. I'm not sure how much that has on actual consumer spending, but we all know the country's not looking very good right now. Student loan repayments. Now, this is something I've been warning about when this begins in October, which is October now. There's going to be a lot of less discretionary spending because we all know younger people, more the people that will go ahead and spend on those luxuries because maybe they don't have rent to pay. Maybe they don't pay utilities. Maybe they're still staying with their parents. So they're the ones who'll go out there and buy the sneakers, buy the latest trending clotheswear, buy the latest tech that's coming out. And with them now having to repay their student loans, that's going to be a lot of money taken out that's normally spent on these retailers. And we're going to get Q3 earnings results very soon. So it'll be very interesting to see how that's going. And now the latest thing that's got consumers worried, the new global tensions connected to what's going on in Israel and Gaza and pretty much the whole Middle East. We know Egypt is now talking out about what's going on. The UAE has been talking about what's going on. Iran, we're seeing what's going on with southern Lebanon. This could break out very quickly to an all-out conflict in the Middle East if things aren't handled carefully. So that's also going to be something at the front of people's minds of like, wow, should I really go out there and spend? Should I go on that holiday? Or should maybe I should put some money aside in case who knows what happens? There's more supply chain issues, in case what happens if a conflict breaks out if the US joins and then some all of a sudden there's attack on the US. Okay, that's the unimaginable. But you're going to have a lot more people be more conservative. Maybe they're going to work on getting their preparedness items before going out there and spending on luxuries or going on a holiday. So that sort of pile up wears on consumers and makes them wary. That's definitely true. And you should get your finances in order by paying off debt, high interest rate debt. Don't think about investing until you've paid off any debt that has interest rates of above 7%. Get an emergency fund, and then you can start investing. So he told the CNBC on Monday, for the first time in a long time, there's a reason for consumers to pause. That's exactly right. I'm not going out there and splashing on anything right now because I know there's so much uncertainties coming for not just the US, but for the global economy. Things are going to be very, very uncertain. And if things really hit the fan, you're definitely going to need a plan B to where could you go if a conflict breaks out in your country. Okay, that's what we should all be thinking about right now. Hopefully it never happens, but just like insurance, you hope you never crash your car, but you still buy insurance anyways. So the timing comes as Amazon begins its 2-day Prime Big Deal sale on Tuesday. Walmart and Target are trying to compete with their own sales events to get an early jump on the holiday shopping season. Now, I'm going to put out a prediction here. I know YouTubers don't like to put out predictions because they're very, very afraid of them being wrong. But I'm pretty confident that this is going to be some of the worst holiday shopping results that we're going to see in decades. Simply inflation, the cost of living has destroyed the US consumer. Again, not just the US, Australia, Europe, around the whole world. People aren't going to have that much money this Christmas to go out there and splurge on toys. And again, it doesn't matter, okay? As long as you are safe, you're healthy, you're with your family, you have a good meal together, that's the main thing that counts, okay? You don't need to worry about getting your kids the latest toys or the latest gadgets. That's not what Christmas is about. So Simon observes the retailers having a glaring thing in common, the bargains are not as deep. So that's exactly right. We're seeing a lot less discounts because of inflation, with the cost of things going up. And what happens with inflation? Eventually, all these companies will just keep lifting their prices because consumers start to expect prices to go up. So like, oh yeah, inflation, we just increase it 10%. Even though maybe their costs didn't go up 10%, well, now that we're in the price increase cycle, a lot of companies are just going to simply increase their prices and say, yep, that's due to inflation. For example, they usually say 50-inch TV is $199 or something like that. And now they say 50-inch TV is 40% off. So instead of saying, like I said, it's $199, maybe the TV is now $500. And then I'll say, look, instead of saying $500, they'll say 40% off. So it sounds like a bargain. So you use percentages when you're not real proud of your price point. And I think you got inflation pushing the relative price points up. And I completely agree. Now let's look at the shares of Amazon, Walmart, and Target are all under pressure over the past 2 months. And could have you guessed it, Target is performing the worst of the three, off 19%. And we all know Target had a lot of bad PR previously, a few months ago, with all the stuff they were doing. The old saying, get woke, go broke. So that's kind of happened for Target. So Simon, who sits on the Darden restaurant and Hanes brands board, believes Walmart does have a big advantage over its competitors right now. It's solely because of the food business. Well, yep. Even though if everything gets more expensive, people might stop spending on the latest clothes, the latest technology, okay? But at the end of the day, people are going to need food, and that's why Walmart should still do relatively okay. They're going to have both the eyeballs and the food traffic to probably have a better Christmas than maybe their competitors. That's exactly right. Maybe they'll go there to buy their food for the Christmas dinner, and they may see something here or there, some other items they're selling on a discount, and they may choose to go ahead and purchase those. So I know what you're thinking, well, okay, what does this mean in simple terms? Well, this means I think the US consumer by January 1st will be completely broke. They're not going to have any savings left. Their credit card debt will be maxed out. We're already seeing this with the credit card reports. Credit card spending is collapsing because eventually you max out your credit cards. Unlike the US government that can just keep on taking more and more debt for infinity, unfortunately, consumers just can't keep on taking on more and more debt for infinity. So how this will affect companies is their earnings will fall. So we'll have to see what happens when it comes out to this earnings report. And this can create a domino effect. Remember, one person's spending is another person's income. So if people stop spending, well, then that means the company's earnings are going to fall, the revenue is going to fall, and we'll have to see layoffs. And yes, we have seen a very tight jobs market, but I do not know how much longer this jobs market can keep up like this. So everyone, what do you think about this? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.